Investors in Bitcoin are reeling as the cryptocurrency's value dropped by hundreds of billions of dollars in recent weeks. The sell-off is part of a broader wipeout of more than $1 trillion across major digital assets. But let's take a quick look at how Bitcoin has been performing. As you can see here, it tumbled from a high of $124,000 in early October to around 84,000 on Saturday, though it has gained some ground this week. But it's not the lowest Bitcoin has hit this year. If you look in April, the cryptocurrency's value stood at $76,000. Well, the recent market sell-off has also dealt a significant blow to US President Donald Trump and his family's wealth. So what is happening in the crypto world? Eleanor Terrett is the host of the Crypto in America podcast, and she joins me now from New York. Eleanor, great to have you with us and appreciate you getting up early in the morning for us. Now, firstly, the value of Bitcoin has lost 25% of its value in the past few weeks. Can you explain what's been happening here?
Yeah, absolutely. And thank you for having me this morning. It really, as you mentioned, it's been a wild month for crypto, Girish. We've seen $1 trillion wiped off the global market cap map, and Bitcoin has fallen roughly between 25 and 30% from its all-time high. Of just last month, we saw 126,000 per token of Bitcoin, right? So we're down, I believe I just checked, it's around 87, 88,000, but a couple of days ago, it did fall to lows of under 82,000. So, we are seeing some rebound now, but, it's been a pretty uncomfortable month if you're in the trenches, as it were, in the crypto pits here. But, I talked to a lot of macro analysts, wealth advisors, and asset managers who tell me that there are several reasons for all of this happening. And starting with macro uncertainty here in the US. It's weighing on digital assets in the same way that it's also dragging on equities right now. So there's some uncertainty about Fed rate cuts and that outlook potentially being a little bit lighter next month. We've had, the last 2 times the Fed has met, we've had those cuts, which crypto traders, equity traders, historically pretty excited about, which means more liquidity coming into the markets, but we may see a pause on that in December. So there's some concern over that for sure. Also concern over labor markets, and a rising unemployment rate and stress in corporate credit markets is adding to that anxiety. And then fear that AI, you've probably heard a lot about this. It's a common fear in the equities market right now. AI has been propping up a lot of the equities, and there's some concerns that there's some overvaluation there, and then it might be at the end of its run. So from a macro level, that's adding to the fear. When it comes to crypto, traders are worried that we've hit this part of this 4-year cycle, right? You hear about the Bitcoin 4-year cycle where prices usually fall, they rise, and then they fall. Historically, we're in a window right now where things drift lower. So some holders are selling ahead of 2026, which is historically, if you look at the cycle, the 4-year trend, 2026 would typically be a down year. So you've got that to worry about, these 4-year boom and bust cycles. Are we on the brink of a bust cycle after this historic boom that we've seen run up where Bitcoin did hit an all-time high? And on top of that, we just saw a massive wipeout in the retail leverage market last month, which forced some balance sheet unwinds, more and more forced selling across retail traders in this already volatile market. Some profit taking too. Of course, the Bitcoin hit the all-time high, as I just mentioned. So there's a lot of factors at play here, but it's really sort of a perfect storm. And now it's kind of all culminating in this sort of sell-off that we've seen in the last couple of days, where Bitcoin did hit a low. I believe it was its lowest low since April of this past year. But if you think about it, actually talking to all these people who are trading this stuff and have been around it for so many years, it is really just sort of a blip in the market. I mean, a 30% drawdown in crypto compared to the equities market really is nothing when you talk to these people. So it's an interesting way of looking at it. There's the way of looking at it from the crypto side and then from the traditional trading side. So it's a tale of two markets there, Girish.
Sure. So do you see this as a correction of sorts that you might have expected? Or if I ask the question in another way, was Bitcoin running simply too hot in the past month?
Yeah, I think there's definitely there's definitely a way of looking at it, talking about that for sure. I think the financial markets have, been on tear in the last, couple weeks, couple months or so. I mean, like I said, there's a lot of liquidity to be had in this market, a lot of sort of this real confidence that you've been seeing from these crypto traders comes from a lot of red tape being cut here in the United States. You've seen Donald Trump, you mentioned him in the beginning, and we will talk about his, crypto dealings, I'm sure, in just a few seconds. But he has been cutting a lot of regulations here in the United States. It's been giving traders a lot more confidence to kind of come into the markets and say, hey, the digital asset space is an okay place to play in now. We can trade this stuff. We can, build companies based around crypto here, and it's going to be okay. So you're seeing a lot of price appreciation based around that. Donald Trump's doing his own thing in the crypto space. As you mentioned, he's had about $1 billion of his net worth wiped off the map just in the last month because of the crypto drawdown. But the Trump family doesn't seem to be too worried about it. Eric Trump actually just in the last couple of weeks or so said, this is a prime buying opportunity if you are in crypto. So not too much worry there from the Trump family. And it's an interesting data point. The Wall Street Journal in September actually said that the Trump family net worth is now more in cryptocurrency than it was in real estate. And as you know, the Trump family name, they made their name on real estate. So interesting data point there.
Yeah, it's interesting you talk about Donald Trump because, you're talking about that high of, 125,000 in early October. But the massive slide happened, almost once Donald Trump was threatening an additional 100% tariffs on Chinese goods. So why did this spook investors?
Why did the tariffs spook investors?
Yes. But it seemed to be timed. It seemed to happen exactly at that point, and there are numerous reports that have cited that fact as well.
Yeah. So, well, with the tariffs, it's like I said before. So with Bitcoin, it's funny, right? Because it was created to kind of exist outside government norms, outside of traditional finance norms, and what you're seeing now a lot more is that crypto, Bitcoin trades a lot more in tandem with the actual, with the regular equities market. And so what you're seeing is a lot more of that correlation. So when the equities market falls, Bitcoin tends to do the same. When Bitcoin falls, the altcoins, as they were, the alternative coins to Bitcoin, that's like your Ethereum, your Solana, and the like, they tend to follow the same trend. So when the tariff announcement happened and the equities markets, had their massive collapse, you saw Bitcoin follow. And there's a lot of the same sort of anxieties that go on the macro level that equities traders are thinking about, that cryptocurrency traders are also thinking about. So it's interesting when you think about why Bitcoin was created and now, 20-ish, 15, 20-ish years later, they're kind of colliding on the same path now. It's an interesting story.
Yes, I was interested to know as well with Bitcoin, you were mentioning before that there can be some significant movements if the Federal Reserve does cut rates. If that happens, is it a fair assessment from some finance gurus who are quoted as saying that Bitcoin specifically is currently in a bear market situation? Do you agree with that? And would that change if the Fed Reserve moves in December?
Yeah, I think Bitcoin, it's depending on this 4-year cycle narrative, right? So what has historically happened in the past is that crypto has been in a niche, sort of operating in its own sort of part of the market. What's happened a lot this year, and I mentioned because of all the red tape cutting and, Donald Trump kind of saying that, this is okay and putting a pro-crypto head of the SEC and the CFTC and all sort of the regulators, right? And saying that crypto is okay to trade in and to invest in and to build in. There's a lot more interest in that side of the market. And so there's a lot of institutional interest. Wall Street is involved now. You've got BlackRock, you've got Larry Fink, the head of the biggest asset manager in the world, coming in and saying, Bitcoin is the future and we're going to tokenize everything, all these traditional financial vehicles. And so with the institutional interest, a lot of people are saying, a lot of these traders that I speak to are saying that the 4-year cycle is, probably not the same 4-year cycle that we've been looking at historically in the past. And that we're not probably on the edge of this like boom and bust like we have seen before. And there's a lot of like institutional interest propping up the prices. So I think with the Fed rate cut, not the rate cut, but if we don't see another Fed rate cut, if we just see, them keep the rates the same in December, I don't think it will have too much, at least what I'm hearing is it won't have too much of a long-term impact on the price. It might have a little bit of a wobble. And obviously we've seen, some evidence of that in the last couple of weeks, just with the worry that we've been seeing. But I think in the long term, traders are probably going to ride this out and just kind of chalk it up to, some of the long-term macro trends that we've been seeing in the last few weeks.
Yes, and given the level of liquidity that you were talking about earlier, what does it tell us? What does this recent crash then tell us about the sort of investors that are going into crypto in more recent times particularly since Donald Trump came to power, claiming that he is the crypto president.
Yeah. Yeah, so it's much more sophisticated investors. Like I said, it's before it was a little bit more of a niche, industry. Sort of these, traders who felt like they wanted to operate outside of traditional finance. There still is today, frankly. It's probably one of the last standing open free markets, right? There's still not very many regulations around crypto. That's coming though. The US Congress is actually writing laws right now. There was a bill that was passed this past July around putting a federal framework in place for payment stablecoins. We are now waiting for a bill around just crypto market structure in general, which will sort of just kind of give some rules of the road for like the entire crypto industry, kind of give some guidance as to who will regulate. Will it be the CFTC? Will it be the SEC? And kind of just lay some ground rules. So once that happens, there'll be even more institutional interest. I think there's still some, big money probably sitting on the sidelines, just kind of waiting for that bill to pass, sort of like that final green light. But like you mentioned, like since Donald Trump kind of came in and said, okay, this is all okay, that you have been seeing many more of those big Wall Street players. You've got the BlackRocks, you've got the Fidelities, you've got the Franklin Templetons coming in, you've got the ETF flows. Many crypto ETFs have been hitting the market this year. You've got the single product ETFs, the Bitcoin ETFs came to market in 2024. You're now seeing Dogecoin ETFs. There's a Dogecoin ETF coming to market tomorrow. One came to market yesterday. So there is that Wall Street appetite that is coming, and a lot of it is chalked up to kind of this cutting back of red tape and this notion that digital assets aren't all that bad, which was kind of the message that was being pushed under the prior administration, a much more cautious approach.
Okay, we'll see where all that big money ends up. Eleanor Terrett, really good to have you take us through what's been happening in the markets. Thank you so much.
Thank you.